of August proved to be highly volatile for the US dollar and largely favorable. The market initially braced for the Fed Reserve's decision on the interest rates, but July's Fed meeting offered no surprises, and indeed they were none. The only thing of note was Jerome Powell's hint at a press conference that a reduction in the policy rate could be on the table as early as September. By market logic, this should have pushed the dollar lower. However, global politics intervened in the currency market. The escalating conflict in the Middle East has not only intensified but threatens to turn into a major confrontation. As a result, the dollar surged back to the 104.40 mark, bolstered by increased safe haven demand. It also posted strong gains against both the British pound and the euro, following the Bank of England's interest rate cut and dovish comments from the European Central Bank policymakers. Its bullish run might have been even more pronounced were it not for the current state of the US economy. Recent reports indicate that manufacturing activity continues to contract, while employment has fallen to its lowest level since 2020. With the release of the monthly non-farm payrolls data later today, the pressure on the dollar could intensify. In the meantime, let's take a look at the economic reports scheduled for Monday, August 5th. You are watching Traders Calendar. On the first trading day of the following week, major global economies are set to release the final business activity data. These indicators are reported in three categories: manufacturing, services, and the composite index that combines both. Currencies can react to each of these reports individually. Mathematically, an increase in the composite index signifies improvement in at least one sector, enough to offset a decline in the other. If activity in both sectors declines, the overall index declines as well. For Australia, the composite PMI is estimated to have fallen by 0.5% to 50.2 points in July. If the actual reading is in line with the forecast, the Australian dollar is likely to lose value against the US dollar. With the Australian dollar often serving as a liquid alternative to the Chinese yuan in the global markets, the yuan is also expected to come under pressure. China's economic performance is not as strong as it was a few years ago. Although the composite index remains above the crucial 50 points threshold, forecasts are edging it closer to contraction territory. The index is anticipated to decline by 0.5 points to 52.3. The outlook for Japan appears particularly positive. If the report comes in as expected, the composite PMI will not only leave contraction territory but also rise by over 3 points to 52.6. Given that the yen has already strengthened this week following an interest rate hike by the Bank of Japan, an increase in business activity would provide an additional boost to the Japanese currency. In the euro area, where the manufacturing sector typically lags behind and services drive growth, a projected decline in the composite index signals a serious economic downturn. Despite heightened activity in the services sector amid the ongoing Olympic Games in Paris, a decrease in the composite PMI to 50.1 points could drag the euro down against the US dollar. Data on a producer price growth in the euro area is also due out on August 5. Given the ECB's intention to continue lowering interest rates, any rise in producer prices could act as a cautionary signal for the regulator. Although the forecast is for a modest increase of 0.2%, and currency markets are likely to respond positively, pushing the euro higher. Even if the euro gained some ground, its bullish run is likely to be short-lived. In the United States, the composite PMI is expected to reach an impressive 55 points, outperforming other major economies. with the June index already at its highest level since April 2022, and they have been rising constantly for the past 18 months. The expectations for further growth seem well founded. As you noted, the U.S. services sector has outpaced manufacturing for the fourth straight month, and this trend suggests that the expected increase in the business activity will likely be driven by the services sector. With the summer vacation season in a full swing and business activity growing at its fastest pace in a year, the services sector is poised for further expansion. The US services PMI is anticipated to edge up to 51 points in July. This, in turn, could support the dollar, leading to its potential rally or at least heightened volatility. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions, and offers are welcomed. We wish you profitable trading and see you soon!